Hello traders, welcome to this week's analysis from the 20th of January to the 24th of January. This week we'll be covering the Euro USD, Aussie Dollar USD, USD Japanese Yen, British Pound USD, the New Zealand Dollar against the USD, and gold. Thank you. As always, a quick disclaimer, today's analysis is for educational purposes only. All views or information is of my own opinion and should not be taken as investment advice. Forex is a high risk, high reward business and you should never trade with money you cannot afford to lose. That being said, let's get right into the weekly analysis. Here we have the Euro USD. As I mentioned in last week's analysis, we were looking for a sell signal around this 1.11800 area or around this 1.12407 area, remembering they're areas only and not exact, because the overall bias on this pair is bearish. As we can see, what's happened last Thursday, we have this beautiful looking reverse bearish pin bar just here. Let me just get rid of that, just draw an arrow, just here, which of course formed at or around the 1.1180 resistance area, static resistance area. So that was in line with my analysis. We didn't get on this trade here because we have other trades in the market and we don't want to overtrade too much, of course. However, if you did get on this trade, then good for you. This is a nice, very nice looking sort of inside bar setup. Let's get rid of that. We have an inside bar here, and then we have the reverse pin bar just here, which of course resulted in price capitulating back down on Friday. As we can see here through this very bearish candle, that price has broken through its previous, not only broken through, but closed below previous resistance, shorter term resistance of 1.11050 or again around that area. So what does this mean? It means that the bears are well and truly in control. From a price action point of view, we'd be looking to enter this market somewhere in between this 1.1105 and the 1.1180 area. I would call that the sell zone. So for myself and my clients, given the fact that we have some trades in the market already, we will wait for a retrace and for a price action signal somewhere in this zone here to allow us to be able to sell on better strength. Our first target, of course, would be around this 1.109886 and then further targeting here around the 109.296. And should we get some decent momentum, then of course we'd be coming right down here to the 1.8806 area or thereabouts. So the overall bias is very bearish on this pair. Again, we're looking for a price action signal somewhere between this 1.055 and the 1.1180 area to take advantage of strength, temporary strength, to go short again. Should that not present itself, and if the risk to reward is available, then we will look for a price action signal just below this 1.1105. That would be in the form of probably an inside bar setup, but nevertheless the overall bias is bearish on this pair, and I can't see any reason for now why that would be any different, but of course anything could happen in Forex. But my overall bias is bearish. As I said, we're looking for a signal somewhere between the 11880 area or the 11050, a bit of a short-term retrace, so we can sell on greater strength. Thank you. Here we have the Aussie Dollar USD. Just to recap on last week's analysis, my overall bias on this pair is bearish. The long-term downtrend is bearish on this pair. As I mentioned last week, we have a significant support area here around the 69261 area, and we have this new swing high here just above the 70114 area. We have support at 67545 and support at 67240. We also have most recent support around the 68110 area. Here we have support here. We have some minor support here, beg my pardon, and we had previously resistance the 68110, the 67545 and the 67240 areas are the three support areas, and at this point the dominant resistance is around the 69261 area here. So what has happened, myself and my clients are in this market. We are short on this pair. We entered the market, we placed a sell limit on the 13th of this month based upon this nice looking, albeit small, reverse bearish pin bar. On the 14th, our order got matched or got filled, and of course what's happened now, price has capitulated down. What is interesting is the very next day we had this bullish pin bar here form, which of course failed, and then the very next day we had this beautiful looking bearish reverse pin bar. This is about as good as a reverse pin bar gets just here. It formed at a significant resistance area around the 69261, this area here, and of course was rejected. So what that means is clearly the bears are in control at this stage. This bearish pin bar here would have given you a great opportunity to enter the market short, provided you know how to trade reverse pin bars, of course. But nevertheless, it's an example of how you often get two bites of the cherry. We entered, as I said, here on this bearish pin bar here, and then 3 days later, if the order didn't get filled, it would have got filled by this bearish pin bar just here. So that's the first lesson. Keep your trades in the market, your limit orders in the market, if in fact you're taking a limit order, and just wait. You often get 2 or 3 bites of the cherry for your order to get filled. Nevertheless, this beautiful looking reverse pin bar just here confirms that the bears are in control. We now have this very significant bearish candle that formed last Friday, which has closed below this resistance area here around the 68897. So again, that holds us in good stead that we are on the right side of the trade. Obviously our first take profit is down here at around the 68110, as I mentioned in last week's analysis, previous support, which was previous resistance. So this is our first profit target here. Should we get good momentum and should it go our way, of course, then we will just simply pyramid our positions down to here, then eventually down to here and beyond. So for now, I'm very bearish on this pair. I like the way that this bearish reverse pin bar has formed. This is about as good as it gets. You have 3 areas of confluence. You have the trend, the overall bias is bearish. You have level. In this case, you have a static significant resistance area here, a significant event area on the chart in the form of resistance. And for my way of thinking, this area here, the 69261 area here through this resistance, is the line in the sand for the bears. As long as price is contained under this area here, then I can see no reason why you wouldn't capitulate further down. So we have 3 areas of confluence. We have the trend, we have this, we have the area, and we have the signal in the form of this beautiful looking reverse bearish pin bar form at a significant event area, static resistance on the chart. So you've got 3 reasons, if you like, or 3 confirmations why you would enter the trade short on this pair. The other interesting thing to note is if you were to apply your Fibonacci, if you started your Fibonacci up here and you ended your Fibonacci here, you would see that the high here of this bearish reverse pin bar formed at around the 45 to 50 area, retrace area of the Fibonacci. Now, I've spoken many times about the 50% phenomenon of the Fibonacci. If you were to overlay your Fibonacci on this pair on the daily time frame, of course, because all setups that I show you or all analysis is based on the daily time frame unless otherwise advised, then you would find that this very nice bearish pin bar formed at around the 45 to 50 retrace area of the Fibonacci. That gives you another layer, if you like, of confluence to confirm that you should be entering this trade short. It's about as good as it gets from a trading perspective. So again, just to recap, we are short on this trade. We entered here on this bearish pin bar, a bit wobbly, and we're in profit, of course. So we'll wait and see what happens, but for now there is every indication that you'd want to be heading south, or at least be on the short side of this pair. Anyway guys, that's my analysis for the Aussie dollar USD. Thank you. Here we have the US dollar Japanese yen, and in last week's analysis I mentioned that I was slightly bullish on this pair based upon solid period here, and should a breakout occur from this consolidation period area here, then my bias was slightly bullish. So of course what's happened is, now I've deliberately zoomed out of this chart, by the way, traders, just to give you the overall picture and to show you something here that can avoid you being trapped. So of course what's happened since then is price has well and truly broken out of this consolidation range here, being previous resistance, and now we can see we have a series of upward candles, upward movement. What is interesting to note is my bias now is bullish on this pair, but here is the interesting thing. I want you to zoom out of your charts, because a lot of traders would have seen a breakout of the top of this consolidation period and would have entered the market in line with the recent uptrend, which is fine. The only issue is, if you zoom out of your charts, you will see here in this 110608 area we have upcoming resistance here, right here, long terms. So a lot of traders, and that's fine, they would have entered the market based upon a breakout of here, would have seen a buy signal somewhere, and they would have entered the market, but most traders actually don't zoom out to see the impending, what I would call danger, ahead of them. And this here in danger. Whilst I'm bullish on this pair, I won't enter the market long on this pair until I see a close above this resistance area here. This resistance area here has to be broken to enter the market long. And I will only enter the market long, of course, with one of our three trading signals that present themselves. So I guess the takeaway is, don't be too hasty when you see a relation. We all know that after consolidation there is a breakout, and clearly there's a breakout, just to repeat myself, towards the uptrend. So don't be too hasty to trade the breakout unless you zoom out of your charts and see what is ahead of you in the form of previous price action. Remember, price has a way of repeating itself. Patterns have a way of repeating themselves on the charts. So for me and my clients, I won't recommend a buy order or a buy entry, I should say, until we get a clear close. If this is above that, then historically you can see there is really nothing that wouldn't suggest we wouldn't be heading back up 1, 2, 3, 6, 5 area and beyond. So for now, there's price action to be taken, but it is on my watch list, and should price continue to move north and close above, again, this area here, and we get a price action signal that we're looking for, then we will be going beyond. So my bias is bullish pair. I'm not entering the market yet, simply because we've had a breakout of this period. I'm not saying there's anything wrong with that. If that's what you want to do, that's great. I'm a risk-adverse trader, so I encourage you to take a macro view, zoom out of your charts, and just have a look, working from left to right. Is there anything that would indicate that there is something that would stop your trade from going your way based upon previous price history? So anyway, I hope that makes sense. But again, my bias is bullish. My clients and I will be entering the market long should it continue in the uptrend, targeting a price above this 11068. Again, to target, first target is 12365 to get it, around 120 pips or so profit. Should in fact we get a price action signal to allow us to enter the market. Cheers. Hi traders, this is the British Pound USD, and just want to give you my take on this pair. We're in an uptrend at the moment, been in the uptrend since September. Essentially started around here with this bullish reverse pin bar forming, and we now have, of course, higher lows, higher highs, go up until it's consolidated in this area here. And of course, after every consolidation, you have a breakout. In this instance, it broke back out in the direction of the uptrend and created a new high here at around the 135-100 level. So what we're looking to do as traders here with this pair, obviously this 127.854 level here was previous resistance over here, has now turned support, being the bottom of the consolidation. And of course we have a resistance here. The top of the consolidation was short-term resistance, which has now turned support at around the 129 or 1300 area on the chart. What's interesting to note is we have this inside bar set up here that formed over the course of a week and a half or so ago, which capitulated prices back up. Now this formed at around this 1300 level here, or inside what I would call this buy range. This buy range is this 1.29 or 130 level and the 1.27854 level. So somewhere in between here and here is our buy zone. So what we're looking to do, as long as price stays above this 127 level, 127.800 level, then we are bullish on this pair. So we're looking for a simple excuse me, price action signal to form in this zone somewhere, in the form of a reverse pin bar excuse me, or in fact a sucker setup, so that we can go long on this pair. So we'll wait and see how that plays out, and obviously we'll be retargeting the recent high back here of around the 1.35 132 area, somewhere around there. So I'm a bit messy with my drawing, but you get the point. So we'll wait for a simple signal to form again in this zone for us to go long. Again, as long as price stays above this 127.854, which is now significant support, then we have a bullish bias on this pair. Cheers. Here we have the New Zealand dollar, US dollar. As I said last week, my bias on this pair remains bearish. The overall trend is bearish. As I said last week, we have resistance up here at 67864, around that area, and resistance here at 67515. We remain bearish on this pair as long as price stays below this 67864 resistance area. Of course, with the new swing point or pivot point here, the 67515 becomes the new resistance. So again, if price remains below 67515 to 67864, then our bias is bearish on this pair. Now my clients and I are in this pair. What happened over the course of last week, we had this inside bar structure here, which we've entered the market on, and a couple of days later our order got filled. What has happened since then is last week we have this bearish reverse pin bar has formed, which of course started the push downwards. So again, you can see here through this bearish candle here, price is starting to head south. So not a lot to report on this pair. However, we do have again a bearish bias on this. What's interesting to note is around this 6.5 area here, you'll see we have this bullish pin bar just here. So we could see a bit of a pop in prices. If price comes down, we could see a pop back up off this previous bullish pin bar. However, should we get a break and a close below this area here, then there'd be no reason to suggest we wouldn't keep on our merry way and hit our first take profit target of around this 64853 area here. So again, not a lot to report. We are bearish on this pair. We are in this trade, myself and my clients. So we'll just see how it plays out. But for now, with the advent of this bearish pin bar that has formed on the daily chart, that holds us in good stead that we are on the right side of the trade. Time will tell, of course, but that is my bias on the New Zealand US dollar. Thanks. Here we have gold. As I mentioned last week, my bias is mildly bullish on this pair. Since last week, my clients and I have a buy order in the market on this pair. What has happened is we had this inside bar sucker setup structure here, which was very interesting. So when I saw that, that was in line with our trading edge, with our trading plan. So we have entered a buy stop order on gold. What's also interesting, of course, is this. Since then, we had this beautiful looking reverse bullish pin just here form at an event area, the 1534 resistance, previous resistance, which is now turned into at least short-term support. This bullish pin bar, which was rejected at a significant event area, in this case, as I said earlier, previous resistance, and this could very well now act as new support. So we have a very nice looking signal just here at an event area. This bullish also, of course, formed within what I call the trade action zone, which is between the EMAs, as I teach my clients, and of course has been rejected by the longer term EMA just here. So that stands us in good stead. Since the formation of this bullish pin bar, we have had a series of inside bars just here form, which of course is a continuation signal. So from a price action point of view, I see no reason why this won't continue on its merry way, retargeting the recent high of around the 1610 area here, or even 1620. There's not a lot of room to move, but there is a 1 to 2 plus risk to reward on offer here. So that's why we've entered the market. We have, again, just to recap, we have a beautiful looking bullish reverse pin bar form just here at an event area of the chart, being significant support, resistance turn support via this bullish pin bar. It's also formed within the trade action zone, be rejected by the EMAs. It's in line with the short-term uptrend. So all the factors are there, all the confluent factors are there to support going long on gold. So of course we'll wait and see what happens. Anything can happen, but that's my take on gold. That's my overall analysis. We are bullish on this pair, and we'll wait and see if our order gets filled and if in fact it hits our take profit. But of course I'll keep you informed of that. Thanks.